I'm Martin King, Financials Analyst at Edison Investment Research, and I'm joined today by Denis Jackson, who is Chief Executive of Law Debenture, and Laura Foll from Janus Henderson, who, along with James Henderson, manages the portfolio of the Trust. Welcome both. Denis, perhaps for those who are less familiar with Law Debenture, could we just start with you explaining what Law Debenture is, what it's trying to achieve, and how it does differ from those other trusts?
So Law Debenture consists of two distinct but complementary parts. The largest part is managed by Janus Henderson. That consists of 84% of the net asset value. And that's a traditional, but you'll understand from Laura why it's differentiated portfolio of mostly equities, entirely of equities, but mostly UK equities. We also have 16% of our net asset value in our professional services business. So that's a private investment. That's not listed. And that's the bit that we believe makes us unique. From an investment perspective, which I believe is your question, the IPS business has one objective. That one single objective is to underpin the dividend of the total proposition. So if you look at the last 8 years of Law Debenture's earnings, we paid out, or dividends, we paid out £294 million worth of dividends, and 98.6 million pounds of that has been the after-tax profits of the IPS business. So if we can produce those real cash profits in the IPS business, that's about a third. That's covered about a third of the dividend over the last 8 years, and that's our goal, to maintain and underpin the dividend of the business.
And Laura, from managing the investment portfolio, what are you aiming to achieve, and how does this flexibility impact your ability to do that?
Sure. So what we're aiming to achieve is, it's a simple objective, is to grow the capital and to grow the income over time. And how IPS, the independent professional services business, helps in terms of running the 84% of the NAV that's the equities portfolio is that it expands our investable universe. So what I mean by that is, in any given year, we at Janus Henderson know that we've got roughly a third of the income for the trust in the bag, if you like, from the professional services business. And what that means in terms of running the portfolio and investing it is that we know we've got that income, so our investable universe is bigger, because we don't need to go after the higher dividend yield shares if we don't think there's an attractive total return there. Now, if we do, we absolutely can, and I'm always keen to point out that some of the high yielding stocks like the Tesco's of the world, the HSBCs, have been really good performers. So it's not that we ignore those areas at all. They will always be the core of the portfolio. But it's that we can also invest in much more unusual areas for an income fund. So whether that's a turnaround story like a Rolls-Royce, whether it's a company at an earlier stage of their life cycle that isn't paying a dividend right now and frankly shouldn't, but might at some point in the future. So it's just about having that longer list of available stocks, and we can show that over time that's definitely been additive to the performance.
And it's a very different world today from how it looked at the start of the year, and the full impacts of the war in the Middle East are yet to be seen. From the IPS perspective, what sort of challenges and opportunities is that going to throw up for you?
Well, I think at a high level, one of the strengths of the IPS business is its diversification. It's a portfolio. It's a mini portfolio business. It's just like Laura will talk about. We have quite a long list of stocks within the investment portfolio. The reality of the IPS business is we disclose 3 lines within the annual report. But if you actually look what underpins that, we've got between 25 and 30 different revenue lines. And you're right, you talk about the world as a different place. We've also got quite a geographical spread, mostly UK, but we have offices in the Americas, in Ireland, and in Hong Kong as well. And the Channel Islands. So we've got, and if you look at our customer base last year, we billed just under 9,000 customers, and 95% of those customers were for less than £50,000. So I think the point is we've got an incredibly well diversified portfolio. But to your point, different things weaken, different things strengthen. You mentioned the Middle East. It's fair to say that the Middle East, we've been managing that, if you like, on a remotely, on a fly-in, fly-out basis, and that's been quite a rich vein for us. And as you over the last few years, there's a good demand for the governance service products that we have in that region. We've done Sukuk financing out there for many years. We were seeing increased amounts of financings in that region, and an increased demand for providing company secretarial services and even some of our safe call whistleblowing services. Clearly, we don't know, to your point, how this plays out over time, but in the short run, that's gone a little quiet. Interestingly, if you look at other parts of Central Asia, we've done a lot of work in Kazakhstan over the last few years, and now you're seeing Uzbekistan becoming increasingly investable. So we're actually doing other work there. So I think there's, if you take our UK pensions business, that would be largely from, world geopolitics, other than if you're on the investment committee of a pension scheme. The biggest things that are impacting our UK pensions business at the moment are the Pensions Act, which became law got royal assent on the 29th of April. So, long answer to your question, heavily diversified business, both geographically and by product. You mentioned before we started filming, you'd never sit on January the 1st and think where we are on by the time it gets to the mid-year. 100% agree, but my 8 years of Law Debenture have taught me pretty much that every year. And we think of IPS as more of a speedboat than a supertanker, and it's got the ability to move its resources around and react to the different pockets that are doing well and need increased allocation of capital and resource, and potentially de-emphasize those that don't.
And Laura, since the start of the year, interest rates are no longer going to come down. Oil prices are much higher. Long bond yields have gone up quite a bit, and yet, equities have been very resilient indeed. What's going on?
So I think resilience is the right word, and you're right. There's two key debates in the market at the moment: the AI disintermediation. So before the war in the Middle East, that was the key market debate, and then you're right. So now we've had the war in the Middle East, spike in the oil price, and therefore inflation likely higher for longer, obviously depending on how it resolves. And yet the market is up comfortably in absolute terms, and at the time of filming, the trust would be ahead of that. So it comes back to diversity, exactly as Dennis was saying. So what has done well in the market would have been different than we would have maybe thought. There are obvious beneficiaries like the oil and gas producers. Some of the miners have benefited from the copper price going up. And then there have been less obvious ones like takeovers that have happened that have helped our performance and the market. So think names like Beazley and Schroders, both of which we held in this trust. And then further down the market cap scale, things like Senior, which was an aerospace components producer. So there are always different elements of the market doing well at different times. But I think the fact that the market is up quite comfortably in absolute terms when we're filming this is a good demonstration of that diversity and that resilience of it. And the fact that we were starting the year and are still, the UK market's on 12, 13 times earnings. It would still be at a big discount to the rest of the world, whether on a sector adjusted basis or not. And I think that's why we're seeing that takeover activity, and also why we're seeing that resilience.
And can you talk a little bit about what you're actually doing in the portfolio, the opportunities that you've seen thrown up?
Yeah, so AI disintermediation did, in our view, throw up some opportunities. And we bought, with some of the takeover proceeds actually, because we'd sold the likes of Beazley after that was announced. So we bought two new holdings in the area, one being Relex and one being LSEG, the London Stock Exchange. In both cases, so those purchases were both in February, which was really the height of that AI debate. And with things like Relex, it got to a point where the dividend yield was on a par to that of the market. So it got to a 3.5% dividend yield, and it got to about a mid-teens price to earnings multiple. So really, in our view, attractive valuation for that type of business, where if you were to read their earnings releases, you wouldn't think anything had happened to that company. And it's our view that with things like LexisNexis that lawyers use and things, that is their data. So I think it will prove resilient. And this is just my opinion, and time will have to tell. But that is their data. There's a moat around that. I think it will prove more resilient than the market was implying at that point in February, when there was this huge debate happening. And what they need to do to prove that is just to keep reporting the kind of results that they're reporting right now. But it will take time for the market to feel comfortable about that.
It is an uncertain world, but it always is every time I look at it. But it's particularly heightened at the moment. You've been through many challenging periods, and the company has performed well. Is there any? Well, perhaps you could talk a bit about that performance, but also, is there any reason why it should be different this time for you?
Great question. Is there any reason why it should be different this time? I think what our excellent investment managers do every day is they look at their hand that they have every day and decide every single day if that's the right hand for them to have, and they adjust it accordingly. I think when we think about managing our businesses, we're not complacent. You must never, ever be complacent. I think Laura's mentioned an interesting theme there, which is dominating every headline and every topic at the moment, which is, the emergence of a new technology, artificial intelligence, and where that takes us. We think for Law Debenture, that actually makes knowledge slightly cheaper. It's easier for many of us to access a broad spectrum of knowledge, but we think it actually puts a premium on experience and judgment and nuance and trust. And I think those are key elements to Law Debenture's journey over 137 years. And we're very, very keen to make sure that we maintain and invest in those. It's not that we won't be adopting new technologies. We've always done that. On AI, we're leaning into that where we believe that makes sense. There are certain highly repetitive, low-level tasks that we're looking to use the tool. We've had some success actually with respect to certain low-level coding, which you'll have read a lot about. We're not a software house, but like everybody, we have to knit together different systems, and we've found that some of the tools that we've been using have actually been able to achieve certain integration of systems for us much quicker than we would achieve without them. So that's encouraging, and that's. But if your next question is how much efficiency do you get from that? I don't know. It's like, how much efficiency gain do we get from all using emails as opposed to memos? We don't know the answer to that question. We simply know that over time, if we lean into this sensibly and engage with it in a coordinated way, sensitive to the downsides, because there's a lot of data in here which you have to manage in accordance with the contractual obligations that you've got around it. But there are certain things with respect to so there's very, very definitely elements of the control infrastructure that we have to be extremely thoughtful with, and particularly when it comes to client data as well. But I think the broad answer to the question is it's that diversity play, again, that is incredibly helpful to us.
But more generally, I don't want to let you go without you talking about the longer term performance of the trust, which has been very good, and that, as I say, has been through many different challenging periods.
We've been around a long time. I mean, I like to think of it as probably this century is about as long as I go, which is now 26 years. And I think that, there's a big debate out there about passive versus active management. I am an absolute evangelist for active management. My opportunities in my life I have a greater set of opportunities, so I've been lucky to have some capital invest, and that has always been with active managers. If you look at the great work that Janus Henderson and predecessor firms have done since 2000, we've outperformed the index in 21 of those 26 years. That's a remarkable track record 80% of the time. If we look at our track record over the last 10 years, and these numbers are precisely wrong, and obviously this is a moment in time, but broadly over the last 10 years, if you'd have invested in the All Share, you would have just over doubled your money, and if you'd invested in Law Debenture, you would have tripled your money.
Well, we'll add the performance figures to this video when it goes out, and people can see that. But thank you for coming in. Interesting and insightful as usual. Thanks very much.
You're welcome.